Welcome and what is up there, everybody? This is Casper Trader back here with another video today. And in today's video, we'll be discussing the top 5 REITs to invest in for long-term capital gains, as well as some really sweet dividends that you get paid out every single month. And that's basically the perk with owning REITs. And for those who don't know, a REIT is a real estate company with stock that is obligated to pay out a part of their earnings in forms of dividends every single month. Meaning that you're going to get a paycheck, or, well, in more modern terms, you're going to get some money back straight into your cash balance. Or if you have dividend investment enabled, you're going to get that money reinvested into your stock month after month after month, which really helps with compounding your money. And who can complain about getting money every single month just from a few stocks? Well, I'm super excited to get into today's video, but before we do, I'd really appreciate you guys could smash that like button below and subscribe to the YouTube channel if you guys have not yet. On this channel, we talk a lot about finance, investing, especially on Robinhood. So if that's something you're interested in, make sure to subscribe. So let's get into the video, starting off with number 1. And this is probably the stock that you think about right when you hear the word REIT, and that is Realty Income. Realty Income, if you can load. There you go. So Realty Income is one of the most common REITs that you probably hear about. And I can't complain about it being a well-known name for a good REIT, because it is actually a pretty solid REIT. It has seen some decent growth over the last few years, and right now it's actually a pretty good buying price. As you can see, it's nowhere near to its all-time highs, around like $82, $83 per share. So it still has a lot of margin to make up, and I think it's a really great stock because of, number 1, it's a really high dividend, around 5%, which is split up into 12 months, and you get paid out that certain amount every single month in terms of dividends. And like I said before, if you have dividend reinvested enabled, it's going to be reinvested right back into your position, into Realty Income, which really helps you compound that because you earn money on your earned money, if that makes sense. So Realty Income is a really great company. It's been around for around 50 years, so you're not investing in any new like high-tech company that might go bankrupt in the next few years. This is some more of a stable investment. But this is also something that you like to invest in if you are more of the volatile person, or you're looking for some decent gains or some small losses in the short term. But this stock does move around a decent amount, as you can see by a lot of these hills and drops. But some ETFs that we're going to be going over on this list are actually more stable. So make sure to stay tuned for that. If you're looking for more of a stable investment that just pays you out dividend and you don't really care about capital appreciation. So that is stock number 1, Realty Income. Now moving on to number 2, and that is SCHH. And that is a Schwab US REIT ETF. And this REIT ETF is actually more of those stable ones, like I said before. If you take a look at the last 5 years, everything was about normal until the whole global situation happened that I can't mention. But you guys know what happened, and that's probably the only time that it dropped down this much, other than like there being some other huge recessions like 10 years ago, more than 10 years ago. And this stock is one of those more stable stocks, which also has some good margin to make until it gets back to its all-time highs, which may take some time because with REITs, you kind of know how that's affected by the whole global situation right now. But I think this is still a phenomenal stock if you're looking for some nice dividends. And I'd say this is a really nice dividend yield of 3.6%. It's about the sweet spot. I think that any dividend between 3 to 4% is a really nice dividend for a stock, which usually indicates that the stock is more stable. Because if a stock pays out a dividend of like 10%, that means there's something up with that stock. But if it pays out something near like 3.5%, I say that's a phenomenal dividend yield. Divide that up by 12, and that's how much you're making every single month from this stock. You can buy as many shares as you want, and that's obviously going to increase the amount of dividends you make from this stock. It has a pretty good market cap and pretty good volume, so you can get in and out of the stock pretty well. And yeah, I'd say this is a really good REIT for those who are looking for safer, more stable investments and just want those dividends coming in every single month. So now moving on to number 3, and that is a stock called CCI Crown Castle REIT. And this one is more of that growth oriented, I would say, stock. And if you take a look, it was founded about, let's see, 25 years ago, so it's not that new. but it's also not as old as Realty Income. But if we take a look at the chart over the last 5 years, it has actually been growing pretty rapidly. If you take a look, 5 years ago it was at $80 per share. It stayed around that area for maybe an extra 2 years, and then it started really seeing some growth. And right now it's sitting at around $175 per share, so it has over doubled in the last 5 years. So compared to the majority of these other REIT stocks that we went over and we are going to be going over, this one's more of the growth-oriented stock where you're looking for some large capital gains in the long term, maybe some short-term pretty decent drops like there was in the whole bat book situation. As you can see, the stock dropped from around $160 per share down to like $130. So you're going to see some drops, but overall, I'd say over the long term, this is a really great stock. But because it's a pretty quickly growing stock, it does have a pretty high PE ratio, which means price to earnings ratio. And if you're looking for some good value companies, a lot of them will have lower price to earnings ratios. But if we take a look at even Amazon, that one has a massive price to earnings ratio. But what is it doing? It just keeps growing. So that's just something you have to take into consideration if you're looking for something more risky that also pays out a pretty decent dividend of 2.76%. Then feel free to invest in this stock. You're going to see some more capital gains than the majority of the stocks, but you're going to see a little bit less of a dividend yield. So that's just something you have to think about when you're investing in it. So that is stock number 3. And now moving on to an ETF for number 4, and I cannot find it on Robinhood just because Robinhood probably doesn't support it, and that is VGSLX. And VGSLX is a ETF. It's a real estate ETF by Vanguard, and if we take a look in the last month, it has grown by around 9%. So it's doing pretty well. It's following the overall trend of the stock market, but is nowhere near its all-time highs. Just like the majority of these stocks, it still has a lot of margin to recover, like at least $20-$25 per share until it gets back to its all-time highs. But if we take a look over the last 5 years, it has been pretty stable. There were a few drops of like 10% or so, but there was nothing as big as the whole recent situation drop where the stock dropped by like 37 or 40%. But just because you're buying an ETF, and this is one managed by Vanguard, you're going to be seeing some more steady price gains over the long term, but also a pretty nice dividend, because I noticed that the majority of stocks, especially REITs that have a pretty stable growth pattern, or they don't move up and down a lot, they usually have the better dividends to invest in if you're looking for something just dividend based. So I would say Vanguard Real Estate ETF and the Schwab ETF I showed you previously in the video, those would be probably one of my top 2 stocks if you're looking to invest in something stable that just pays you out dividends every single month. So that's what I'm gonna probably consider. And this one pays you about 0.33% of a dividend every single month. I didn't want to calculate that for every single one, but this one's a little bit of an easier calculation. So you're basically going to be making a few cents per month from this stock, which is not too bad, especially considering you're going to get it every single month. And now moving back onto Robinhood, if we take a look at the last REIT that we're going to be going over, which is STOR. And the reason I put this one on the list is because, first off, I've been investing in it for a while. I started buying it around this area. I think it was around $30-something per share. So it did grow a decent amount. And until the whole recent situation, it has dropped a lot. And this is the reason why I put it on the list. First of all, it's a REIT, which it has to be on this list. But because this stock has dropped so much from its all-time highs, it was around $40 per share, and now it's around $22. So it's dropped by almost 50%. And it's still at around a 50% discount. That's why I decided to include it onto the list. If there's someone out there watching this video who's looking for something more that is going to make them money while in capital gains, like meaning the share price goes up over time, as well as dividends that are pretty high, I'd 100% recommend Store Capital. It has the better of the two. I'd say this one's a phenomenal one to invest in. I would say it might be even a little bit undervalued, because look at its price to earnings ratio. If we take a look at CCI, it has a price to earning ratio of near 100, and this one only has one of 16. Or Realty Income has a higher one and has a lower dividend. So I'd say this is one of those that are slightly more risky because it's more of a newer company that's been around for like 9 years only, but it can see some really nice growth in the short term. And even in the long term, if this company does end up succeeding, there's even a lot of people investing in it on Robinhood, over 20,000 people that bought it on only the Robinhood platform alone. And so, like I said, the dividend of close to 7%, combined with the really great discount that it's at, and the large potential to grow in share price like it has over the last 5 years. 5 years ago, it was at $21 per share, and right before the whole situation happened, it almost doubled. So this stock has been growing pretty well, similarly to CCI, but it has a much higher dividend than CCI. So I'd definitely recommend this one if you're looking for slightly more of a riskier investment, but bigger reward, high risk, high reward. I'd recommend Store Capital, and that is stock number 5 on the list. So that's going to be it for today's video. Those are my top 5 REITs that I'd recommend investing in if you're looking for some monthly dividends to be paid out straight to your bank account or to your brokerage account every single month. So thank you guys all so much for watching, and I hope you guys have a great day.